A number of different brokers are no longer allowing you to buy APE shares, obviously because they can't locate them, as there's no real APE shares for sale, only synthetics. APE is literally breaking the entire stock market. And on top of all of that, the market crash has indeed resumed. So stay tuned and let's make some money. And I want to dive straight in with the key information. So, Melanie tweeted saying, I've now heard from a number of German investors that when they try and buy APE shares, their broker tells them that private customers are not allowed to buy APE. They say technically a sale would be possible, but only business customers and corporate customers are allowed to both buy and sell shares. Many users have been receiving this pop-up when trying to buy APE shares. Melanie tweeted saying, yes, the image pinned above is a direct notice from a broker. It says trading is not available for this product as it's not approved for only retail customers. A number of separate accounts sent in their own screenshots confirming the exact pop-up that was shown that says retail customers cannot buy APE shares. A number of different brokers across the UK and in Europe, like DeGiro, are no longer allowing their customers to buy APE shares. It's not just one singular broker, there's a handful of between 5 and 10 that aren't selling any APE shares. But obviously US customers and some European customers have still been able to buy APE shares. Melanie speculates because these brokers that are selling APE are payment for order flow brokers. She said, that's my theory. Payment for order flow brokers were the ones who delivered the APE shares immediately, or presumably issued a placeholder or an IOU, or have been selling synthetic shares. It's likely that many of these payment for order flow brokers did issue and deliver this IOU and have been facilitating the sale of synthetic shares. But obviously the real brokers that don't issue synthetics, the non-payment for order flow brokers, can't locate any shares of APE to buy as there's none available for sale. Obviously the retail investors still holding APE that didn't sell their APE shares on the first day aren't selling their shares, and therefore there's no real APE shares to sell. Therefore it's likely that payment for order flow brokers are not only facilitating the sale of synthetic shares, but also facilitating the creation of synthetic shares as well. More synthetics need to be created for those retail investors that are buying more. Therefore, if you are also buying more APE shares, try and buy your shares through a non-payment for order flow broker, a legit broker that won't buy you synthetic shares or won't create for you synthetic shares. Therefore, if you do want to buy APE shares, it's best to use these platforms that currently aren't allowing you to buy APE shares, because as soon as they do allow you to buy them, you can buy APE knowing you're getting actual real shares and not IOUs or synthetics. This is effectively just another reason why I don't think you should sell your real APE shares. As Spence said, selling real APE shares to buy more AMC just puts undervalued real APE shares onto the open market that AMC shorts can buy to shore up their AMC short position. Obviously, if you're selling your real APE shares into the market, it allows these shorts and these hedge funds and these trading platforms to buy real shares to deliver to their customers, or allow the shorts to use to close out of their shorts. Now, obviously by this, I'm not saying don't buy AMC shares, I'm just saying don't sell your real APE shares to buy more AMC shares that are likely going to be synthetic. If you do want to buy more AMC, use cash, don't sell real APE shares. This could also potentially be why a number of short sellers like Chanos are still shorting AMC, but they're actually buying and going long on APE. They know there's a very finite amount of real APE shares, and they know there isn't 2, 5 or 10 years worth of synthetics currently revolving around in APE, and therefore they know that APE is going to squeeze. Therefore, to try and offset their losses from shorting AMC, they're going long on APE and waiting for the squeeze so they can try and break even on their overall position. If they can buy millions, if not hundreds of millions of APE shares, when APE squeezes, they make billions and billions of dollars to hopefully offset their losses from shorting AMC. But again, this is just another reason as to why you shouldn't sell your APE shares, because you could end up missing out on the APE squeeze. Guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 10 free stocks worth up to a whopping total of $25,000. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, they officially state they do not sell your order flow to short sellers and market makers like Citadel. Therefore, Moomoo is brilliant for buying those AMC, those APE and those GameStop shares. On top of that, Moomoo was one of the few brokers that delivered all APE shares to their customers on Monday before the market opened. The Raycoin also tweeted this screenshot of the wider market indexes and the VIX, showing that we have absolutely broken the market and the market crash has resumed. Yesterday, the S&P 500 was down 3.2% on the day, the Nasdaq was down 4%, and the VIX also spiked up 18.78%. It seems the S&P 500 and the wider market has again rolled over and the crash has resumed. On top of this, Jerome Powell spoke yesterday and Stephanie tweeted saying she can honestly say she's never heard a Fed chair like Jerome Powell saying there will be pain to households and businesses as they fight inflation. Clearly the Federal Reserve now knows and they're admitting there will be a recession that affects households and businesses and basically the working American people, and they will do anything they can to fight inflation, even crashing the economy. The S&P 500 has rolled over, the market is crashing again, and we're already seeing new headlines of hedge funds that are going bankrupt. Bloomberg tweeted saying Lone Pine Capital Management is facing its biggest challenge since Steve Mandel founded the firm a quarter century ago, with its $5.8 billion hedge fund down the most in its history. It says the Lone Pine assets shriveled as the hedge fund reels from record losses. Its total assets have tumbled 42% this year to $16.7 billion. It says the hedge and long-only funds are both mired in a prolonged slump, each losing more than 30% this year through July on bullish growth stock wagers that soured. So again, this is just another hedge fund that was shorting meme stocks and growth stocks that has lost nearly 42% so far this year. As the market continues crashing and as meme stocks continue running, this won't be the last article we see of more and more hedge funds going bankrupt. As I spoke about in one of my videos last week, I think we've severely underestimated just how many hedge funds, large banks, market makers and institutions will be going bankrupt as a result of the squeeze. I think there could still be hundreds, if not thousands of hedge funds that have been shorting meme stocks that are going to go bankrupt. And I think something that proves that is that Goldman Sachs workers are quitting en masse at the toxic Wall Street giant. It says Goldman Sachs has been hit by a wave of defections, and the atmosphere at the financial giant is at an all-time toxic high right now. Clearly Goldman Sachs is in a very sticky situation and has lost a lot of money and has tons and tons of exposure in the wrong places, causing their employees to simply walk out and leave. Overworked first-year bankers quit and walked out en masse from the bank's Wall Street headquarters on Wednesday after getting news of their bonuses. And it says their departures have been followed by others in the same division. Clearly these employees have been overworked massively over the last year or two, and they're being paid very, very little, and they've received almost zero bonus. Clearly the bank is struggling as they've been losing tons and tons of money over the last year, and potentially Goldman Sachs could be one of those major banks going bankrupt as a result of the squeeze. And finally, APE and AMC shorting has been determined as unsustainable by Bloomberg. The article says that meme stock resurgence piles up the losses for short sellers. Losses this month, as estimated by S3 partners, totals $1.65 billion. Now obviously this is only a $1.65 billion loss on the legally reported short position, not the illegal synthetic shorts. It says the rally in stocks may attract more short sellers, which again is just more hedge funds to squeeze and more hedge funds that will go bankrupt. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.